How's everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist, and I hope everyone is having a wonderful day out there. Today, I wanted to talk about office fit out costs and kind of just what's happening in that sector of the commercial real estate market. Are prices still going up? Are they leveling off? Kind of what is happening there? So, I want to bring in an article here I was looking at. And so, this is from the business journals. And basically, the article is titled, Office upfit costs continue to rise, but have leveled off from inflation spikes. So, and it gets in here, it starts out by saying, as companies continue to view their office real estate as a recruitment and retention tool, the cost to build out those spaces keeps climbing. And that's according to a recent analysis by Jones Lang LaSalle, which found the average office fit out cost is up 2.7% year over year for a moderate style build out of medium quality finishes. Although an increased annually uptick is that annual, in other words, that annual uptick is significantly less than the double digit cost growth observed over the past couple of years. The cost to upfit an office in 2024 varies by office type, complexity, and quality, as well as geography. Among the major metro areas tracked by JLL, 96% saw costs grow less than 6%. But JLL's analysts took into account 4,900 projects completed by the firm in 58 North American markets. So across the US and Canada, the average fit out cost for a medium quality, moderate office style, which features an open floor plan with small to medium sized workstations, fewer than 20% offices, and a 70-30 split between office workstations and collaborative space, totals about $264 per square foot this year. That compares to $257 per square foot in 2023 and $233 per square foot in 2022 and $190 per square foot in 2021. So if you look at, from 2021 to today's cost, going from 190 to $264 per square foot, that's a huge increase in the last 3 years. And then it has a really nice chart here. So for our podcast audience, we're looking at a chart here of the cost of office build outs, and this is basically on a per square foot basis. So we can see here, US overall, again, looking at $264, but what are some of the other major metros looking at? Phoenix is a little lower than that. California is a little above it. And then, a couple places like Anaheim, Los Angeles, Oakland, Sacramento, all basically a little above that. San Francisco, San Jose, well above that. Denver's a little below. Washington, D.C. is a little below. Who is the lowest on this chart? Looks like maybe Dallas. So it looks like Fort Worth, Houston, San Antonio, they look like, some of the lower ends of the spectrum here. Also Virginia, like Norfolk, Virginia, and Richmond, Virginia, looks a little less. As far as the most expensive, it looks like almost a tie between like San Francisco and New Jersey. Now, where I'm at over here, Philadelphia area is still a little high. I mean, we're definitely slightly, it looks like we're a hair above that US average of 264, probably maybe around 270. Ohio, Midwest area, probably hovering just a little below that average. Florida area, to Orlando, Tampa, Jacksonville, kind of, probably 229, 230, 231. So a little lower there in those areas. But I think you also have to consider where are these geography wise, where are these areas? In other words, New York, obviously huge on office space. Certain parts of California, like Sacramento and San Francisco, huge on office space. Orlando, Florida, Tampa, Florida, of course they have office space, but that's not really their thing. I mean, their attraction, their thing is more Disney World, Universal Studios, NASA, with Kennedy Space Center. They're more about attractions, Orlando Magic, and a lot of just tons of apartment buildings, apartments all over the place there. So let's see here. So let's see. Let's go on to what the article says here. So the past 2 years, it's been sticker shock on a daily basis. You think? But we're at a point where tenants are able to plan and budget accordingly. More and more of our clients are coming to us with realistic schedules and budget expectations. It's a much better situation today than it has been in prior years when costs were changing so dramatically, even on a month-to-month basis. So still, even if cost increases have abated, companies today are investing more in their real estate at a time when many are also reducing their footprint or exiting leases entirely. For the offices companies continue to occupy, it's become typical for them to replete with amenities, flexible workspaces, and the latest technology. And that's what I was going to say. So what we are seeing here in the Philadelphia market is, right now, I'll take law firms, for example. All of your big law firms in the city are all reducing their space. They want to move to higher quality Class A type space with a lot of amenities, but they're also doing it on a much smaller scale. So in other words, if you've got 100,000 square foot space, they're moving to a 50,000 square foot space, but trying to get nicer amenities because that's still going to be cheaper for them than what they were paying for that 100,000 square foot space. And they're willing to, if the space has got to be outfitted or upgraded or modernized or what in any way, they're willing to spend a little bit of money because they're literally taking half the space that they used to have. So let's see what else to say here. The flight to quality trend happening in office leasing decisions is also rippling down to space design and build outs. Companies want to build spaces that their employees want to come to work to, whether it's human-led design, focusing on wellness or sustainability or amenities or technology. The challenge is when people come into the office, they need to have the flexibility to have focused work, in-person collaboration, and they still need to have the virtual collaboration. So designing office space today is a lot more complicated when you're trying to balance those themes. Yes, I would totally agree with that. And I still don't understand. Here's the one thing I don't understand. Say you have 250 employees, okay, and you've got 150,000 square feet, and that's probably small for 250 employees. But anyway, that's just, like I said, for argument's sake. And okay, you go virtual, and now you say you've got all of your employees working on like a hybrid schedule, and they only have to come into the office 2 or 3 days a week. But on say Mondays and Fridays, they can work from home, but Tuesday, Wednesday, Thursday, they're in the office. But then you downsize, you cut your space in half. So you still have to get all those employees into the office a couple of days a week, but now you've got half the office space. So how does that work? How are you jamming all those people in? So some of this stuff I still don't understand. And even if you're not bringing them in once a week, say you I don't know, say it's like once a month or once a quarter, everybody's got to get together again, then you're still trying to bring everybody together into that same office space that's nowhere near big enough now. But anyway, so it's just something I have pondered. Okay, landlord tenant improvement allowances are shifting. In the tenant favored office market that's been pervasive since the pandemic, landlords have attempted to retain and sign on tenants by offering lofty concessions, including beefed up tenant improvement allowances and, thanks to inflation, more elaborate build outs and a much smaller pool of tenants in the market. Owners have gotten more aggressive at their offerings, even when it eats into their income. A separate analysis by JLL found office REITs, which own about 15% of the U.S. office market, saw their highest concessions ratio ever in 2023, with only slight declines so far this year. Open-ended diversity core funds, which own roughly 10% of U.S. office space, spent $2.2 billion on TI allowances in 2023. That's 20% lower than the highest 12-month total of TI spent on those funds in 2019, and their concession spending has also moderated somewhat this year. According to JLL, 10-year equivalent TI packages have fallen 6% on an annual basis and have averaged about $75 per square foot in the past year. Still, on the whole, the delta between office landlords' TI packages and the cost of building out a tenant's space is growing. And yes, and I'm glad they said that, because that was kind of the point I was getting to. It was like, yeah, okay, like things might have fallen a little bit, but they're still not great, and costs are still going up. Albeit they've slowed a lot. You're not going to see as large of an increase as you did the last couple of years. But I mean, we've seen an explosion in costs. Like I said, if we go back up here, going from $190 per square foot in 2021 to $264 this year. I mean, that's just an enormous increase in your cost to fit out. So yes, I mean, it's just very interesting here. Again, I thought this was helpful if people were looking for an update or some information on the office market, kind of give people some updated data, see what was going on. But I think a lot of the themes here are, companies, reducing space, um, putting perhaps more money in, but also wanting higher quality spaces. I think that's a big shift there. Wanting a kind of a lot of the bells and whistles. So if you're sitting there with a C or a B type office space, and you need to spend money to fit that office out to get it up. That could be a hard proposition, because I think you got to look at like, well, okay, well, what's the vacancy in my market? Is my market, do I have the opportunities to maybe pick off some of these better clients that want to reduce the size of their spaces by kind of beefing up my building a little bit? What's that going to cost? And then if I got to make concessions on a 10-year package, what is that? What is a 10-year lease deal? Like, what does that look like? So yeah, I think that, if you're a landlord right now, I mean, you certainly got some big challenges ahead of you. On the other end of it, if you are a company that leases office space, you might be able to find some decent deals out there right now, actually. So I mean, you get some good things done for good space. So, but anyway, okay. So that's kind of my update on office fit out costs. Like I said, I'll kind of wrap up with my usual. So if you like this episode, please make sure to like, share, and subscribe. Please make sure to check out thebankernextdoor.com. Remember that we are on YouTube, Rumble, and all major podcast platforms. Please check out some of the other episodes and other content that I've put up on the channel. That always helps. And I will see everybody back here again real soon. Thanks a lot.